Welcome to Multifamily Method, a podcast which explores the state of the multifamily real estate market and some of the backgrounds, methodologies, and words of wisdom from some of today's most successful multifamily real estate entrepreneurs nationwide.
I think there's a lot of similarities between real estate professionals, brokers, investors, developers, mortgage brokers, tech entrepreneurs. We like the thrill, right? We like the thrill of the chase. It's so much more about, the destination, right? It's this, right? It's the steps every day, taking a couple steps forward, and then you look back into the year and you're, holy cow, like look at the progress we made, and it's something to really get excited about and be proud of.
Today we have AJ Klink, our guest host, a co-founder and board member of Capstone Apartment Partners, and Tim Milazzo from Stack Source in the studio with us. Welcome, guys. How are you doing today?
Doing great, Alex. Thanks for having us.
Thanks so much for welcoming me.
Glad to have you, and thank you for taking the time to be with us. Let's start with AJ first. AJ is a co-founder and member of the board of Capstone. Can you give us a little background into your professional career and yourself?
Sure, Alex. It started back in about 2009. I think we ended up meeting pretty soon after that, maybe 2010. I grew up in Southern Michigan, went to University of Michigan, moved to Charlotte, got into real estate pretty soon after graduating school. This is really the depths of the recession when I endeavored to get into real estate. So tough time to start. Wasn't much transacting at that point. Like a lot of folks who wanted to get into real estate, I started, to be perfectly honest, trying to sling residential homes, but wasn't that successful selling homes because nobody could qualify for a mortgage. So, spent some time growing a couple small general brokerages, ultimately met up with two partners and co-founders at Capstone, Brian Ford and Bo McIntosh. And at that point, along with Austin Green, who was already on our team, we just started grinding, and we thought there was a great opportunity to take advantage of the multifamily space. In the years to come, we saw a lot of really great tailwinds, and just kind of put our heads down and heard a lot of no's, did a lot of door knocking, had a big uphill battle with the more established, more institutional brokerages like CBRE, JLL. It was MHA at the time, now the Cushman team. Some great competitors. It's tough to get our foot in the door, but over time and a lot of pushing, we're finally able to break through.
Can you talk about what your current plans are too, and how your focus has shifted from brokerage over the last several years to what you're looking forward to at this point?
Sure. So Capstone over the years has really grown beyond anything we ever imagined, from just a few guys in an office to over 100 employees now and close to 60 brokers across 15 offices. Transacted, I think, around 450 closings in 2021. So it's grown much greater than we expected in a good way. We realized, Brian, Bo, and I, and the rest of the executive team, yourself included, that we were almost getting in the way of the firm's growth. What I mean by that is we had really shifted out of brokerage a number of years ago, around 2019, and had started focusing on private investments and multifamily development. And thus came to the conclusion that we really needed to install a proper full executive team, which we did at the end of 2021 with the hiring of Mike Mosier, our current CEO, and a handful of other executive hires. That really excited to see the future there. I feel like the firm's been on rocket fuel for the last couple of years, but in particular the last few months, and see some really exciting things to come. Personally, I am on the board along with Brian and Bo now, and yourself, and really not that active at all in the day-to-day at Capstone, but really blessed to be a part of the team and the culture. I mean, this, and I've heard it before on the podcast. it's amazing to say in such a competitive industry, but we have had less than, I'd say, 2 or 3 brokers ever leave us. And that's quite an amazing feat. And, the 13, 14 years that we've been in business, I think it's a testament to our core values, team before self, the relentless passion for improvement that all of our team members have. The fact that we're all driven self-starters. I think we have a mantra to check your ego at the door and embrace the chaos of this crazy business. So I think I like being a part of that group. I like being inspired by the team. That's frankly how I came to know Tim, is my interest in technology and the intersection between CRE and multifamily and technology. So I'm kind of dipping my hands in where I can add value, but trying not to get in the way of the company's growth.
Yep. I agree. And I'm really excited to have you here, Tim, as well. And like you mentioned, AJ, I guess you guys together intersected with your passion for technology and how to integrate that into commercial real estate. And then what you're doing, Tim, is exactly that, right? So excited to hear about what you have to say and your path. So do you want to give us a little background on yourself, Tim?
Absolutely. And thanks so much, Alex and AJ, for welcoming me into the podcast. And really good to be here and chat with you about some exciting topics. And there's going to be much more overlap between multifamily, commercial real estate, and technology in days to come. I think I've now known a few members of the Capstone team for a little over a year. And the vision that you guys have for what's coming in multifamily, combined with the culture of the way you treat your clients and the way your company acts as a unit, is really cool to see. So I'm Tim. I'm co-founder and CEO of StackSource. I'm one of 2 founders here. We came into commercial real estate finance from a software and technology background. So my co-founder Nathan and I started this business in the New York City area over the last few years, first building a software platform that was designed to make the commercial and multifamily financing process more transparent. That's our vision, is a transparent future for what financing options are and how to capitalize commercial and multifamily real estate deals.
Tim, I'm curious, how did you get into that space? Was your background in commercial real estate, or was it technology, or maybe both?
Yeah, well, I have a family background a little bit in commercial real estate, and that was my first exposure to commercial real estate, was really growing up at the dinner table. My dad was a commercial real estate broker on the leasing side in New York, and he would commute into the city from New Jersey on the train, and he'd come back with some stories of landlords and how a tenant negotiation went on some big office lease in a building in New York City, and we could then point to that building in the city when we were in eyesight, and it was really interesting to hear about the real estate industry. When I got older and I studied finance in college, I interned for big finance and real estate companies. I didn't see myself following in the footsteps of becoming a broker. It wasn't my natural desire or necessarily talent to try to pound the phones and build a book of business and compete with the guy in the cubicle next to me to try to earn a book of business. Where my passion really was the technology that I saw just happening in my consumer life, what was happening online, what was happening on the internet, and the businesses that were redefining the internet. And so I pursued that. My first full-time job out of college was in advertising technology for Google. And I had a few other roles at these big tech companies, Silicon Valley tech companies, in advertising technology and in operations and in sales. And ultimately, I got re-exposed to real estate several years into my career through real estate tech. I had friends working in the real estate industry, real estate services and investing. And we went to a real estate tech meetup one day in New York together, and my eyes were open to, hey, this is evolving. The opportunities in real estate data, in transaction technology, in bringing transparency and speed to this space, that really lit my fire to figure out, hey, what's happening in real estate tech and what might be happening next.
Let's transition. What are some hot button tech topics for you right now, Tim? And AJ, I'd love for you to interject too. Both of you are heavily focusing on the tech side of things.
Yeah, go ahead, Tim.
Yeah, well, I think in the prop tech industry at large, and that's really how it's been branded this last couple of years, is prop tech being property technology, but you can use real estate tech as well. There's a lot of themes going on. One is just bringing efficiency to transactions for those that are making deals. So digital deal rooms and bringing a source of truth online and making it easier to get transactions done. Real estate data is a huge one. And maybe to broaden that out, we think of traditionally real estate data being things like comps, location intelligence, and all of those are evolving. They're becoming more transparent. But then there's an increasing use of alternative sources of data for things like underwriting and valuation and scoring locations based on who's tweeting what there is like something that big landlords are getting into. There's a lot of alternative sources of data that are now being kind of folded into the underwriting process, which is interesting. We're seeing auctions for properties online. We are seeing marketplaces. We're increasingly seeing real estate tech companies now start to touch and hook up and integrate with each other. There's a lot happening just in prop tech. And as a matter of fact, prop tech has had an increasing amount of venture capital funding behind it over these last few years. The last 3 years in a row, it's broken a record for the amount of prop tech funding for a year. And so I think there's a lot happening with the way we operate real estate, the way we transact in real estate, the way we value it. And even the way we use real estate is very different today than 10 years ago.
Yeah, I was going to add that the way that we initially got connected is I was tasked with really trying to emphasize and grow technology at Capstone. So, for the last, call it 3.5 years, I've been focused on trying to look around corners and figure out where this industry is going. I think traditionally, brokers are known, or I should say not known, to utilize technology that much. The traditional sort of old dumb broker that just knows how to pick up the phone and make calls and talk folks into things is much different nowadays, and increasingly so every day. And, through that, some things that I'm noticing in the industry before we get to, fascination with what you're working on, Tim, is like you mentioned, I think a lot of efficiencies being created on the data side. I think specifically on the operations side, you look at, one example, the build to rent space. And, this can even transition to more traditional garden buildings that have more interior corridors. But think of the build to rent space and the ability to now, and I think COVID really exacerbated this, the ability to have door lock systems that are smart locks. And, you can now allow your prospective tenants to tour units without even having a manager there to hold their hand into the unit. I mean, the impact that will have on asset values and, what I mean is you effectively should be able to reduce your property management staff through that sort of technology use, and the impact that extra, $60,000 to $120,000 a year salary has on the cap rate is phenomenal. So I think that's a very easy way to see the benefit of utilizing technology on the operations side. I'm particularly fascinated by the blockchain and the potential tokenization of real estate over time, which I know is in its infancy today, but there have been some case studies. And I think over time, real estate investing will become much more accessible to the everyday investor, not necessarily only accredited investors, but as an alternative to investing in equities. I think there are some legal things that are being worked out, and the banks are becoming more and more comfortable with that now. But as you try to look 5 and 10 years down the road, you can really see the writing on the wall. And what you have to do is look at other industries, right? I think CRE has been a laggard, but if you can see all of the other industries where e-commerce has become so popular and successful, it's not hard to see the way that our industry is going. I think at Capstone, we've had a big emphasis on technology and really trying to make our brokers' lives as efficient and effective as possible. Really trying to focus on helping all of our brokers achieve the top return on their time as humanly possible. I think we've done a great job. I think that's in large part why we've been so successful as a company and why we've been able to retain so many of our staff is the quality of life's good. Obviously, the culture is good, but we have so many support systems, mostly bolstered by technology, that we can just get more done in a day. And the same efficiencies in technology, we're looking to also add, improvements to our clients' lives. And I think that segues into how we got connected. I've been fascinated with, all the things that we're talking about, but specifically wondering why there hasn't been a really strong tech-enabled commercial mortgage option for borrowers. Obviously, everybody's heard of Quicken Loans as the most obvious example for residential home mortgages. Probably about 2.5-3 years ago, trying to figure this out, why we weren't seeing more stack sources, if you will. Went out and just did a bunch of research and a bunch of networking and found that there were probably 3 or 4 early stage startups that were trying to transact on the loan side as mortgage brokerages online, or more, really improve the efficiencies online, and just came to really respect what you were doing, Tim, and become really impressed. I think your technology, from what I've seen after having talked to the CEOs of what I think are the biggest and most successful sort of tech-enabled commercial mortgage brokerages, I feel your technology is far and away more advanced. I think your setup and the way that you've developed your team, kind of taking some ideas from the traditional mortgage brokerage model, meaning putting, your mortgage brokers in different locations and syncing up as a company and as a team. But the tech-enabled aspect of it and the efficiencies that you've created for your brokers as well as for borrowers, I think is quite amazing. So obviously we got connected, and you were doing some fundraising, and we got involved in some of that, and it's been really exciting to watch you grow. And I know there's been some referrals between the companies, and who knows, there might be more ways to work together down the road. But would obviously love to hear a little bit more about what you're up to specifically, and what makes StackSource so unique.
And also, Tim, those technologies that AJ was talking about, what that is, what that looks like to the general public, and how that can be an effective tool and is a differentiator for you as StackSource.
Absolutely. Yeah. Thanks so much, AJ, for setting the stage on that. So we've grown a lot since really just even a couple of years ago, when we were this prototype of a commercial financing platform online. And the company now, we've grown a bunch by headcount and originations, but at the core, we're exactly what we set out to do at the beginning, which is bring commercial and multifamily financing options online, make it easy to navigate what financing options do I qualify for on a deal by deal basis, and make it really easy to get different real live loan options online, and then pick the right financing option and get it closed. Now, we've built a lot of features around that. We have a web platform, and a lot of, the experience of a client, somebody that might be buying a multifamily asset, or they're refinancing a medical office building. We're commercial real estate wide. We don't do residential unless it's a larger portfolio of residential, properties to rent. But anything that's a commercial mortgage or a commercial financing scenario. We have clients that may find us online through one of our blog posts, or they may find us through a partner, and they can actually click get a loan and start inputting information about the deal they're working on and the type of financing they're looking to find. It's a bit more involved than the Rocket Mortgage example that you used, AJ, because there's not one type of mortgage that you qualify for in the commercial land. There's lots of different flavors of commercial mortgages. Why you might want one type versus another is a bit more complex. That's why we also have capital advisors at StackSource that act as those expert guides that help you to sort through, hey, I'm qualifying for a lot of different types of loan options here. Which one would I be pursuing and why? What's going to be different besides just the interest rate and the loan amount? And what is my life going to be like taking a bank loan versus CMBS versus life insurance company? So we have these people that are experts in the space that have a lot of experience in real estate capital markets and lending. But you never lose the transparency of, hey, I'm matched with these financing options. I can see my loan quotes coming in live. I can compare them online and easily. And at the core, that's what StackSource is.
So are those capital advisors also then going in with the multifamily brokerage side, we have the auction process that we put each property through. So are they going and having each lender compete as mortgage brokers, on that side of things, say that they do? Is there the same competition as StackSource for a lender fighting over that loan?
Yes. Yeah, exactly. Competition between lenders and having a marketplace of capital sources is really what drives the best financing options for the borrower. And we're unequivocally on the borrower side. So, in a sales transaction, there may be a buy-side broker and a sell-side broker. In a lease transaction, there's certainly two brokers involved. On the financing side, like, hey, are we representing lenders and helping them get nice loans? No, we are representing the borrower, trying to get lower rate, higher leverage, less recourse. What is it that the borrower wants to get better financing on that deal? And that might be different, borrower by borrower, deal by deal. So those are some of the classics, is recourse and leverage and rate, but it might be flexibility on prepayment penalty. It might be more money in reserve for a value add deal. There's all these ways that you can optimize your capital stack. And that's where we got our name, is StackSource. We're sourcing the capital stack for the deal. There are only three ways you can make more money on any given real estate acquisition deal. One is a lower basis or a lower acquisition price. Good luck in the market today, trying to, get a lower basis. Cap rates are very compressed. The brokerages like Capstone do a great job getting top dollar on buildings for the selling clients. Maybe you get lucky and find an off-market deal these days, but that's difficult. You get one shot at it. It's basically your negotiation and your network. But that's one way to make more money if you get it at a lower basis. The second way is find ways to boost that NOI. And AJ pointed out a couple of them before: technology that you can reduce expenses, maybe optimizing your rents and adding value to the property so somebody's going to pay more for it. There's lots of ways to boost your NOI. But the third way is a lower cost of capital. So that could mean a lower interest rate on your loan. It could also just mean a higher loan amount because, hey, if your interest rate is 4.5 instead of 3.5, but you're getting much higher leverage and you're using less of your own equity, your entire cost of capital could have gone down on that deal. So there's all these strategies for trying to lower your cost of capital. And that's about managing your capital stack. It's about sourcing and finding every possible source that might be advantageous to you, modeling those out, understanding how they impact your deal. And that's what we're trying to make. That is the one piece that we're trying to make just a bit easier, just a bit faster, so you really understand and it's an effective process.
So that seems to be the big value add with StackSource, right? Is speed, efficiency, and probably reaching way more capital in the market than your average mortgage broker, who most folks will hire, and they'll go to maybe the top few dust lenders or banks that they have worked with in the past. Tell me a little bit more about how you're differentiated from, the more traditional commercial mortgage broker.
Sure. Reach is one of them. So we have, call it more than 1,000 capital sources within the StackSource, capital marketplace that are signed up on our platform. They're engaged. They've shown to us the parameters of the types of deals they're looking for. Actually, another feature that's going to be coming out this year, in addition to getting loan quotes and seeing, hey, the numbers from each of these lenders on a deal by deal basis of the ones you're matched to, You'll even be able to see feedback from other borrowers who have transacted and gone through the process of getting a loan. So, if you search Yelp or Google Maps or something, you can see how somebody else liked a restaurant or an Uber, like your driver has a rating. We're bringing ratings and feedback and reviews to the lending community next as another data point. But we've got more than 1,000 of these lenders and capital sources plugged in. If you're in an underwriting scenario that would qualify for something more like Fannie Mae, Freddie Mac, HUD, really programmatic. It's not a balance sheet lender that's deciding if this is a good loan. It's like you qualify or you don't. And here's the pricing in the market today. That's actually what we're working towards, instant quotes on our platform. We have instant quotes for a couple loans on our platform in beta today. Freddie Mac small balance is live with instant quotes on our platform, HUD 223F. Actually, by the end of the first quarter, we are expecting to have Fannie Mae small loans also live with instant quotes on our platform. So if you've got a small multifamily loan and it's stabilized and you're looking for your rate, for instance, and your maximum loan size, why should you wait on any human, including a StackSource human, even if we're a little bit more efficient? Why should you wait on any human to get your pricing and sizing for that loan when it's already predetermined by some Fannie Mae sizing guideline or some Freddie Mac pricing table? We've built those things into our platform so you can get instant quotes in those scenarios.
I was going to add, as somebody who's been through your process and your intake form myself, what you get in an instant fashion is not generic whatsoever. It is quite specific. And I think that must have something to do with how maybe somebody on your team is interfacing with these lenders on a regular basis and querying exactly where they're lending, how their profile or their needs are changing, kind of what buckets are full and what aren't. Is that right? I mean, is that the way that your terms are able to get so dialed in on these instant quotes? So it's not we can lend you up to 75%. A very vague term sheet. It's a quite a dialed in specific quote.
Yeah, absolutely. For the instant quotes, it's based on things like the zip code of the property that puts you into what's the size of the market and what region you're in. It's things like the leverage, where you are on the debt service coverage ratio. There's all these like dozens of criteria that are going to impact not only what capital sources you might qualify for, but what are the rates, terms, and sizing going to look like? So in particular for these agency programs with Fannie, Freddie, or HUD, as soon as we know a zip code, a leverage, a value of the property, an NOI figure for like at least the past 3 months, you're already in that land where like we have a 98% accurate quote. And there can be some exceptions and qualifiers in certain circumstances, but you know what the standard sizing and pricing is going to be for that type of loan immediately.
I was having a conversation with one of our clients that we've done a lot of deals with. I'm not sure they've ever used StackSource before, but they're in a 1031 situation right now. And one thing that they did was identify it was an industrial deal. They've never purchased industrial before. So I think this is another benefit of StackSource is that you're not just multifamily or you're not just doing triple net. You're covering the full matrix of everything commercial real estate, right? And so you have access to all of those lenders and all of that data. Yeah,
we've touched all of the major asset types. Multifamily and industrial, by the way, are absolutely on fire. The returns for 2021, based on what I'm seeing in the market data, I mean, those who are far away the best asset types. But whether you're in one of these hot asset classes where there's going to be tons of capital sources and you can use the pricing of a marketplace to really beat up these lenders and like make them compete on rate and make them compete on all these terms and negotiate them down, or whether you might be working on a hotel deal right now. Have hotels had a great run? Like, no, they've struggled and they've had resurgence of pandemic, and especially in some of these major cities that have had tourism shut down and all these restrictions. But the use case might not be like, hey, there's going to be tons of lenders competing for your business, but rather than calling 100 lenders on your own and have 97 of them say no hotels, let's just match you right away to the dozen that might be able to do this deal and get you some quotes. And getting your deal done may just be like the hallelujah moment if you're in one of those asset classes. But we've done loans for acquisition, and that is certainly the most common use case on our platform. Refinance is really common as well. We're actually doing an increasing number of construction loan deals on our platform. And some of our largest have been construction loans, specifically in the multifamily space where there's such a demand nationwide for new units, new rentals, new properties, even land development loans. We did about $40 million of land development financing on our platform last year. And so we're getting into all sorts of financing scenarios. In the very beginning, we got some acquisition deals of first-time real estate investors that didn't know where else to turn. At this point, we're really playing for all major asset classes across the small to mid-market for commercial real estate.
AJ, you touched on this, that commercial real estate in general has always been lagging on the technology side. And then Tim, you mentioned that you're having Fannie and Freddie small balance, and then HUD is just historically in yesteryear and probably maybe always will be. But how are those segues coming together? And do you ever see like Fannie and Freddie or these government agencies fully embracing the technology and making things instantaneous?
So it's interesting with Fannie, Freddie, and HUD. For all these agencies, none of them lend directly, right? Because there's a lot of work to do in getting access to the customers, in getting information, and honestly, they're not even, in most cases, servicing the loan either. Like, so
Right.
the loan is originated. You get your money from some underwriter, servicer that actually gave you the money and did all the loan docs and ran the whole process with you. Even at that point, Fannie and Freddie are not like taking over the loan and collecting your payments. They're still doing that through the lender. That all they're doing is using their ability to stamp a bunch of loans and back a bunch of loans. And they're trying to support it like in the back end of the capital markets so that people buy those bonds. And people buying those bonds makes this capital market possible. That makes the non-recourse nature of their loans possible. In particular, that's really what it does, is it allows these loans to be non-recourse to the borrower, because if the borrower's finances aren't standing behind it, something has to stand behind it. It's right. A stamp for Fannie, it's a stamp for Freddie. They really have no interest in being in like the operations of making the loans, of servicing the loans. They don't touch any of that. Will they use more technology to make the process more efficient? We can hope. We can hope for sure. In the meantime, if they're putting out information about how to underwrite these loans, how to size them, how to price them, we've kind of built our own technology around how to use that information and size and price loans instantly.
And then have you catered that also to the Arbors of the world, the Lumits that are originating and servicing those loans, or have you created that technology as well?
So we don't do any of the origination directly. So StackSource, neutral borrower side, marketplace where you can compare your options. What we can do is we use the information, we size, we price the loan, and by the time it gets to that designated underwriter servicer that is actually going to go through the loan docs and the process and do the full underwriting,
right?
We keep them honest on not adding an extra yield spread premium that pads their pocket. So it's really just in the borrower's favor that this is actually built into the platform, that they're getting what should be market rate in terms without anything else added in.
I doubt that there's any other group in your position that's giving as full of transparency as you are, with as much data behind it as you are in all of this space. So it's a very cool product.
Yeah, I was curious, this is innovative from the standpoint that I don't think this sort of technology or company existed even 5 years ago. No. So we're talking about, how us young whippersnappers are, hosted podcasts and, talking about technology and, smart locks. How are your clients, how are they receiving this? Has that been a hurdle, convincing sort of more seasoned professionals to consider a more innovative approach to financing?
There's a big part of the market that's like desperate for things to be more transparent and for things to be clear and for them to feel a sense of ownership over the process, because you're actually showing them the process. You're allowing them to click the button to go to the next stage. Like, rather than I have to get on the phone, like it has to be the person behind the counter that does this stuff versus me in front of the counter. There's a class of people that are desperate because every other part of their life as a consumer, they've got an iPhone in their pocket. They are doing what they want immediately. And increasingly, even in residential real estate, if they buy a home and then they're using a Rocket Mortgage or a Better Mortgage, and they're able to see the process and what docs they need and exactly what's going to take to get to closing, they expect the commercial mortgage process, or more broadly, they expect the commercial real estate side to start acting more like innovations they've seen on the residential side. Zillow has been around for a while now, and now on the commercial side, they don't want to wait to hear like, oh, you've got to make me happy enough to give you an off-market deal. It's like, no, just show me what there is. You be my expert advisor, but you use the term like getting out of the way before, like that's almost the job of these platforms, right? Mm-hmm. The platform StacksWorks, it's almost let's let the humans do the human things. The human things are, listen, I've seen this pitfall 50 times. I'm going to tell you how to avoid it. I'm giving you great advice where you're not going to lose money. I'm going to make sure nobody screws you over. I'm going to make sure that you understand all your options. I'm going to make sure that this underwriting is all correct, because a computer actually can't value anything. They can only look up relevant data points. Let's let computers do computer things, looking up the right data via APIs, automatically, pumping out the process that certain lenders need to see versus others, running an algorithm to see whether you might qualify for a financing program. The computer should do the computer things. The human should do the human things. And there's most people recognize that and are ready to adopt. For the people that are so ingrained in the process they've always run for decades that they don't care, that's fine. They can pick up the phone and call one of our capital advisors. Like, it'd be silly for us to say, no, you've got to go click the button. If they don't care about clicking the button, if they're just going to be slinging phone calls, that's fine. I did have AJ have a client that asked if they could fax in a rent roll. Had to look up how to get a fax without a fax machine. And I ended up finding like an online fax number that they could use. And like, did they know we didn't actually have a fax machine on our side? No, they didn't know, but it sent us as an email. That's rare. That might've been a one-off or a two-off thing, but yes, there are clients that just prefer being on the phone. And that's something we absolutely support with the capital advisor team.
Yeah, I think Alex has transitioned throughout his career from a lot more faxes to a lot more Excel files, would you say?
I have, yeah. I still remember the days of handwritten rent rolls. So that was fun. But fortunately for our analysts, we don't have that anymore.
Grown up a little bit.
Hopefully not too often.
Yeah, no, it's not too often anymore. So sounds like you've built very impressive to-date company and technology platform. What are your big goals for this year?
Oh, well, we're still very small, right? We've got a few basis points of market share now. But we're growing quickly. So we've had enough initial traction to say, hey, let's double down on getting the right people into this company to help it grow into the next level. And that's really been my focus over the last, call it 9 months to a year, is how do we get these people that are going to help us grow to this next level? Because it's not just technology features. We're working on a lot of technology features. I can say that we're going to have, new instant loan quotes, and that's true. I can say that we're going to have, new features on the platform to boost this process further and make it faster and more transparent. And that's true. But for me, it's been, now we're hiring up. A year and a half ago, Nathan and I, we had the start of a good team and some really good capital advisors, but we really didn't have a leadership team for StacksWorks. Like, we were just making decisions, going with it. Like, let's try it. Let's see if it fails or whether it succeeds. At this point, we have a leadership team. 2 weeks ago, we filled our last current leadership spot, which is our new marketing director. So we haven't paid for our leads. We haven't gone out and done a lot of advertising. It's really been product-driven growth. People like the product, they use it, they tell about it to someone else. Now we're going to do a little bit of marketing. We're going to actually build that part of our business. 6 months ago, we hired a new head of originations who's on the West Coast. My newer colleague, Richard, who has 30 years of experience and has seen it all in commercial real estate finance from a lender side and a debt and equity broker side. So I've been building the team. We're gearing up to refresh our brand a little bit, to expand what we can do in the capital stack just beyond like getting you a senior loan, because that's something our clients started asking us for, and we realized we hadn't built anything for that use case. So that's, for me, it's been about putting the right butts in the seats. And now that we have that, I think it's really just to expand on that firm foundation. We tripled our loan volume last year over 2020. We have a lot more to grow. We're still a small player in the space. There were like $600 billion of loans struck last year. It's going to take time to build that momentum and grow into one of the leaders in this space.
Just touching back real quick. So it's not just offering senior loans. So does that mean you're going to be doing equity as well?
So we actually closed a joint debt and equity assignment for the first time in recent weeks. It was a $53 million multifamily acquisition in the Austin area of Texas. And we brought a senior lender that was, capping out at 75% LTC. And we were able to plug the next piece of the capital stack with a pref equity provider that we had formed a relationship with. And we haven't built any features or marketing about doing like multiple tranches of the capital stack, but now we're backfilling with, making that use case more supported because we have the relationships, and we've actually now brought on the capital advisors that have these relationships and have done this just as brokers in their past life and debt and equity brokers. Right. And now that we're bringing that in as a service, we're going to start to officially support that in the platform in coming months.
That's awesome. It makes a lot of sense too. It starts to bring things full circle, right?
And we'll finally live up to our name a little bit of Stack Source, because it's not loan source. We're trying to source the capital stack and make it easy for people to discover sources of capital that are going to be beneficial for their deals. That's
great. So AJ touched a little bit, and you touched a little bit on how you started out. Do you want to give some more background on that and, the early days of Stack Source, what that looked like?
I was going to add specifically, I love one aspect of this podcast and meeting folks like you, Tim, is like just the entrepreneurial side. And I think that itch that you have, and I think that's from what I've heard, one thing that brings folks to this podcast is learning, how did he get here? How do I get there? Different, traits that you have. Like I just to expound on that a little bit further. I get impressed by hearing that sort of background.
And everyone has their different paths, which I think makes it such an interesting story whenever you can hear what it was and how you got to where you are, right?
Yeah. Well, I'll tell you what, my own entrepreneurial itch started a few years before Stack Source. I was working at Google in advertising technology, and I loved it there. I had smart colleagues. I had like cool perks with like chefs making food for the employees, and like it was a cool building. And I just thought, like, I'm going to be here for a long time. This is going to be my career. And it was cool. We acquired a startup into our division at Google. And like, I was meeting these people and I was like helping them get set up on like, part of my job was like integrating in some of these people into like the way we were doing business and like our products and our, technology and all of that. Some of them started to leave the company and like go work for other startups. And that was the beginning. It was like, hang on, why are you leaving like the best place to work where you've got all this cool stuff? But they were after like the culture of being at a startup where like the role they could play and what they could build was like a bigger piece of, it was, you had a bigger piece, even if it was a smaller pie of like building something and feeling a sense of ownership. That was interesting. One of those people that left was the COO of the company we had acquired. He became the COO at another advertising technology startup. And he asked me if I wanted to go join and like start their sales operations department. And that it was really interesting. And I had this opportunity to then like start something at it was not a tiny company. There were 100 employees at the time. And so I did that company that then got acquired by Facebook a year later. And so here I was on the other side of a tech acquisition, where I was at the acquired company. And once again, similar kind of culture and cool perks and like really smart people, because you find smart people at these big, Silicon Valley companies. But my itch kept growing for building something, innovating, like having a larger role. That was the timing, back to earlier in the conversation, when I went to that real estate tech meetup. And then my eyes got open to all this possibility. And it stuck with me. It was like a splinter in my mind for months of like, what else could be done in real estate tech? And I still think the opportunities are massive. Even today in 2022, the amount of things that we're going to see more real estate tech started in the future than we have in the past. Like there's tons of opportunity. There's ideas that none of us humans have had yet about how to better use real estate or better address real estate for like the world. And that's going to be cool. Mine, I thought, was really simple. You can find your residential mortgage online and get an instant rate. The only thing happening in fintech for commercial mortgage was like a few early crowdfunding portals. Where is the online financing menu? Where's the online financing platform? I thought it was really simple. I'll be honest that I did not know how in-depth and complex certain commercial financing deals could be at that time. I knew real estate people. I had interned. I had a dad that was a broker. I had like other family, but I didn't understand the depth. But maybe it's because I had that outsider perspective. It was simple enough of perspective. People that had been in the business for 25 years, they knew too much to try to change it and to try to bring it online. I knew too little. And yet the truth was somewhere in the middle. That was going to be a tech-enabled financing platform with capital advisors. That's what we ended up growing into. At the beginning, it was just this idea like, hey, let's just get all the lenders and put them together and let you match to them.
So how did the first iteration come? Did you go build it yourself? Did you were already in the tech world? So was it that you knew the program? Like, how did that come about?
Yeah. Well, I'll tell you what, I've made my fair share of mistakes getting from that idea to a business that's working and growing. And I'll tell you one really common mistake when you have a business idea, especially with like tech and like, hey, I found the next market. You may well have found the market, but if you don't know the steps to actually, for technology, there's two things. For any entrepreneur, there's building a business and knowing how to do that and like the mistakes to avoid and the people mistakes and the sales mistakes and the positioning. You need to learn all that. On the technology side, you also need to know how to build a product. Now, I had gotten exposure to building products. I wasn't like a product manager or an engineer at the tech companies that I was at, but I actually did build systems for sales teams to use internally at these advertising technology divisions and some other stuff. And I had bumped shoulders with like some really great technologists. And but if you're doing tech, you've got to do both of those things. You've got to build your product and your platform, and you've got to build the business around it. So one critical early mistake is I've got the idea, I'm going to go hire a software engineer to go build my idea. That's actually like something that happens really commonly when you're a first-time tech entrepreneur is idea, engineer, bang. That's like 1, 2. There's actually some steps in to successful. Engineering is like step 4. I had the advantage of having a friend that was also, actually he was currently working at Google at this time, who was a kick-ass software engineer. And he's my co-founder, Nathan, at StackSource, and he's still StackSource's chief technology officer to this day. We were in it together, figuring out all this stuff that we didn't know about how to build a really effective platform, how to get your go-to-market strategy right. So we were first-time entrepreneurs together, making a bunch of mistakes and adjustments before we got it right.
You don't know what you don't know. So would you say that early on, getting it right and failing, not big failures by any circumstances, were those your biggest struggles starting out, or were there other struggles that once you got going that you encountered that you had to overcome that were larger?
Oh, so many. And I'll let you tell me what might be most helpful to talk about, because I've made people mistakes, and people mistakes can be painful. I have made I didn't know how to fundraise at the beginning. And because of that, we thought we had a seed round put together at one point in time for Stack Source. And then the seed investors that we thought we had didn't actually pull through. And we found ourselves running out of money and having to figure out with little to no cash in the bank how we were going to make it through to our next milestone. I've made go-to-market strategy mistakes. So I think I've made too many of the mistakes that I may or may not make if I were to start another business someday. But I feel like I've made almost all of the headline mistakes.
I think you learn by doing. And like I said, you don't know what you don't know. I guess I'm interested to find out more about it sounds like an interesting story with the seed capital. So let's dive in a little bit there.
Rather than going into like the specific fundraising dynamics and how to actually do the pitch, I'll give you this story. It was Christmas in 2016. Nathan and I and two other people were trying to figure out how to work on our platform and get it launched. And I was also fundraising. And we found out, to summarize, that our fundraising round wasn't going to happen. And it was like the day after Christmas, and we had a few weeks of cash left. At that point, I felt like I've never felt lower as like an entrepreneur or in business. I called one of the members of my advisory board and I was just like, I don't know what to do. Like, I'm going to have to like shut down the business. We had a prototype. We were demoing the prototype, and who we were demoing for was major landlords in New York. Part of the go-to-market problem was we shouldn't have targeted them as our first customers of this, but that's another story. We had been demoing this platform. We had been getting good feedback, and we thought this feedback and these LOIs we had from these big landlords that were going to use our financing marketplace was going to get us the seed funding. The seed funding fell through. It's the day after Christmas, and we have no capital. I got some really good advice at that time from this member of our advisory board. I'll shout out. It's the CEO of CompStack, Michael Mandel. He's the founder and CEO of this real estate data company called CompStack. They do lease comps, and they're getting really good at it.
Yeah.
And he's like, Tim, first of all, call your employees today. Call the couple of guys that are working on this with you. Tell them exactly how much money you have in the account. Read it to them. Read them the exact amount. Tell them what your plan is for how you might be able to survive this anyway. And if they don't want to do that, like, give them their last 2 weeks of pay and like, shut it down. But like, maybe they want to stick this out with you, and maybe they do. Great advice. Hung up. I did that. I called both of these guys and said like, hey, this is the paltry amount of cash we have left. Like, the seed funding isn't happening right now. We're going to have to work for 3 months without any money to get to our next milestone, which would be launching this, not for these major landlords that we need to do a ton of products building for, but for just like first time real estate investors that are looking for. And so we decided to make that pivot. Both of them bought into that because I told them exactly what was happening, exactly how we could get ourselves out of it if we so chose. And for 3 months, nobody got paid. We worked on it. We made it through. So this is just like one of those grit times. We certainly had to have that grit. Is it the right strategy thing to do to let yourself get into that situation? Heck no. I could teach an entrepreneur about like, qualifying and, building probabilities in your model as to whether you're going to get there's so much more you can do to avoid that situation, but we were in that situation. We had to deal with it. One of the lessons is just, as an entrepreneur, whether you're like dire and you're about to go out of business, there will come a time for most entrepreneurs, unless you're some unicorn rock star, and there are some, but there's going to be a time where you're just going to have to decide, I'm not giving up. I'm just going to make it through this. And we're going to adjust things so that it's possible, but we're not going to give up, and we're going to keep trying.
I think that's one of the reasons that we're all in real estate, right? And we are all entrepreneurs. And I think there's a lot of similarities between real estate professionals, brokers, investors, developers, mortgage brokers, tech entrepreneurs. I mean, we like the thrill, right? We like the thrill of the chase. It's so much more about the destination, right? Than it's this, right? It's the steps every day, taking a couple steps forward, and then you look back into the year and you're, holy cow, like look at the progress we made, and it's something to really get excited about and be proud of. And At least that's what keeps me going. I think that's what I've seen around Capstone that keeps all our guys and girls going, to building something, right? I mean, it's much more than just plugging in a hole at Wells Fargo or Bank of America. It's something you can touch and feel and impact, right? I'm sure you've also had an incredible impact on your team's lives, right? Your employees, their professional development. I'm sure they're very proud of working at StackSource and being part of a company that's tripled in size in the last year. I don't know, Alex, if you have anything to add to that, but that's what keeps me that's what keeps me excited about coming to the office every morning at, 5, 6 in the morning and grinding. Right.
Yeah, absolutely. I mean, I look back at my first deal that I ever did was $3.2 million. And I was so excited about that deal. It was in 2013. At that point, it was a good sized deal even for our company.
Yeah.
So to look now, and we have guys that are coming in and in their first year, they're doing 50 and $100+ million deals. That's meaningful and powerful to me, that we were able to create a platform and a brand that enables somebody in their first year to reach goals that we never dreamed about back in 2011, 12, 13, whenever it was. With that, maintaining a culture, and you've mentioned it a couple of times, AJ, you mentioned our culture at Capstone. It's one of the most important things in any company, I think. And it's very hard as you grow to maintain that culture. I think that we have done a very good job. Capstone has done a very good job. The board has done a great job of maintaining that culture here. I could only imagine that as you're growing a business in this environment, and a lot of what you're doing is remote, how do you maintain that culture and build a culture when guys are working all over the country?
Oh, such a good question, and so important. We are remote. And so even Nathan and I aren't working in the same spot at this point. So he's still up in New York. I recently moved down south, but we have people in New York, Chicago, LA, Dallas, Atlanta, and other places like where we have a one-off capital advisor working from home. Our culture is quite a bit different in that way. And that we were already becoming a remote company before the pandemic started. And so we embraced it fully and forever for StackSource because, we're trying to, we're serving clients nationwide. We're trying to really be that next level, next generation online platform for our space. And so we've gone fully remote. That doesn't mean we never meet with each other in person. Unfortunately, that's been delayed and pushed back a lot with the pandemic. We are currently planning like a full team offsite for the StackSource team mid 2022 to try to get back together in person as a full team for the first time in a couple of years. We're chatting with each other online on Slack every day. We have video calls frequently. We have a full team call every Monday. Little things. Sometimes the little things go a long way. I don't know how long I'll be able to keep it up, but I guess it was 2 Christmases ago when we had we had just crossed 10 people on the team. I picked out a book for each person at the company that I thought would be specifically helpful to that person, not just the same book to everyone, but a book for each of the 11 or 12 people that we had. We've got a pretty cool culture right now, and everybody knows that it's harder to get together in person during the pandemic. But now we have people that they've come to StackSource and they've joined here because they don't want to go back to an office in a particular location. They want to live where they're going to live. And if they want to pick up and work from Europe for a couple of weeks, go for it, because this is our culture is much more one of impact rather than here's how much FaceTime you have to have, here's how many days you need to be in your seat, and here's what time you're leaving the office. It's much more about impact, right? And so for that reason, it also goes hand in hand with measurement, right? So if we're not measuring hours and we're not measuring days or FaceTime, what did you do? How many deals, if you're a capital advisor, how many deals did you touch? How many deals progressed? How many deals were closed? How many, and we try to measure and we try to be analytical about that. And that's a part of our culture. We have a culture of curiosity where we're not happy. And I think especially if you're working remotely, if you're happy with what you know already and you're not seeking out that knowledge, you can get to a stale place. You can get to a stale place where you're sitting at home and waiting for something to happen versus I'm curious. I want to know what's happening in the market. I want to know who's transacting in the market. So curiosity is a big one. Of course, transparency. And that's our first one that we list. If you look up like the values for Stack Sources, transparency, that doesn't just mean on our platform. That means like with each other. What are we working on? Who are we talking to? What are we saying? We try to make these things as transparent internally as possible.
Which isn't always easy to do, especially when everyone's working remotely and you don't always have that camaraderie in the office. But it sounds like people are bought in and they really like the culture and what you're building, and they respect that. And the good thing about what we do is, for the most part, we can do it anywhere, which is awesome.
I mean, I think that's why we're here, right? Is the flexibility that we have compared to a more of a corporate sort of an environment. You get your work done, you do a good job, you treat your team right, and you enjoy your life, right? As opposed to hating your boss or hating where you're going every morning to work.
Yeah.
Pretty fortunate.
Let's take a quick break, and then we'll be back with what a current day looks like, and then some rapid fire questions.
Multifamily Method is powered by Capstone Companies, the largest privately owned multifamily investment sales brokerage nationwide. Capstone Companies provides dedicated coverage to both primary and secondary markets throughout the Southeast, Mid-Atlantic, and Midwest regions of the United States. Whether buying, selling, or refinancing, Capstone Companies is here to help. Simply put, Capstone is expertise, experience, extra mile. If you're interested in having Capstone provide a complimentary opinion of value on your multifamily asset, please visit us at capstone-companies.com.
All right, welcome back. We will start off now with some rapid fire questions to round us out. I'll ask both of you guys the same questions and love to hear your answers. AJ, I'll start with you. What is the best book that you've read that's really impacted you? And also, Tim, AJ, keep in mind, either of these could be business or personal or both if you want to share.
I'm going to hit two and break the rules on question number one. I think the first one was The 4-Hour Work Week. This was way back when I had a job coming out of school. And for some reason, I think I actually know because I hated my job. I picked up the book, tried to figure out how I could work remotely or at least do something where I wasn't stuck in this damn office with this boss that I didn't respect. There's that and 7 Habits of Highly Effective People. I think that book is just universally useful. It doesn't matter what you're doing, simple things. But those would definitely be my top 2. How about you, Tim?
I think as entrepreneurs, we're both going to want to break the rules on these rapid fire answers.
Give me 3.
I'm going for it. So I read across a bunch of different genres, and actually I like business books, but I find if I'm mixing it up between honestly fiction, spiritual side, business side, I feel more balanced sometimes, and I feel like my mind is at a better spot. On the spiritual side, I go to the Bible and other books explaining key topics from the Bible about how to live well and how to treat people. On the business side, I love books by Adam Grant on how to work with colleagues and how to set up a company really well. I'll go 3. I'll go one more. If you're specifically in a rapidly changing business environment or a tech kind of venture that you might have really fast evolving competition, I like The Hard Thing About Hard Things by Ben Horowitz.
What is a podcast that you recommend aside from the multifamily method, of course?
For me, I'm really impressed by School of Greatness by Lewis Howes. I think the breadth of folks that he has on, real high level folks. from scientists, data scientists, doctors, entrepreneurs. Pretty fascinated by all of the tricks and tips as to how to become a good entrepreneur there.
Awesome. Yeah, I love entrepreneurial podcasts for sure. On the tech side, Masters of Scale with Reid Hoffman. So he's the founder of LinkedIn turned venture capital investor, and he was like very successful at both of those things. And so he does Masters of Scale where he interviews tech founders. I think one for any entrepreneur, How I Built This with Guy Raz. It goes through the stories and the mistakes made and how like people build successful businesses. And he focuses on famous businesses and brands that we all know.
Interesting. What is one piece of advice that someone's given you, and who was it?
I always remember my dad telling me that it was important to treat everybody with an equal level of respect, from the homeless person you pass on the street to the janitor to the doctor to the business owner. And I think that, couldn't be more true. I think it's something that all of us can use. Tim.
Cool. Well, I gave the Michael Mandel one in the story of StackSource earlier. I'll give one more. I had a good sales director of my division when I was in my first customer-facing job in advertising technology for Google. His name is Don Norton, and I remember him taking me aside after a client call or meeting at one point, and I was focusing a little bit too much on like features and functionality of an online platform we had, and he told me, listen, it's all about the differentiation. Like, some of these features, platform, that's not what they need to hear. They need to hear, how is their life going to be different? Or like, well, how is this different than what they're going to get elsewhere?
That's good advice. As entrepreneurs, I don't think that any of us really regret anything that we've done as we've all grown. But is there anything that you could go back and change throughout your career? And if so, why?
Yeah, that's a tough one. It almost sounds conceited, I guess, to say you have no regrets. But, I feel like when we started Capstone, we were young, and I was probably 22 or 23. And I think when you don't know what the hell a cap rate is, it's kind of hard to feel confident calling any owner. Or when you read it in Wikipedia the night before, and trying to remember how to do the NOI or the value. And but I would say after I actually learned what a cap rate was and understood the fundamentals, I think there was a natural level of for me, a doubt and a little bit, maybe it's scared to call the big owners, to call the really large institutional type owners. Capstone was nothing at that point. But you fast forward to today, we have brokers that we've brought on in the last couple of years that are making over $1 million that are going straight to the top. And I totally believe it. It's a matter of, I think, your perspective, and they don't know any better. Right. And we have all the tools. It's the same conversation. There's no reason to be nervous about calling the group that owns $1 billion of real estate. And frankly, sometimes you'll find yourself more impressed with the guy that just bought his first property than that large group. So I would just say, yeah, don't be afraid to shoot for the stars, man, and call right up the totem pole to the top.
Cool. Yeah. It's so hard to say in retrospect, making so many mistakes. Like, would I advise somebody else to avoid those mistakes? Absolutely.
Right.
But it's the journey that makes you who you are.
Mm-hmm. That's my view as well. And although we had a lot of hardships, we struggled, we had our ups and downs, but I agree completely that any down that we had made the peak on the next up that much higher. Right.
Mm-hmm.
So
absolutely.
Personally, I don't have any regrets on anything that we've done or view them as regrets. They were all life lessons and lessons learned on what not to do in the future.
Mm-hmm. Just got to make something of it.
Yep. What is one thing or two things, maybe three, that you guys have yet to accomplish and want to pursue in the future? And again, this one can be, maybe it's one for business, one for personal.
So I want to grow Capstone to be the most respected multifamily brokerage in the country. I think that's our firm's goal, and we're going to get there. I'd say on the personal side, as anybody here who has kids can probably say, hell, we're entrepreneurs with kids. I look at, my sons like little businesses almost, right? Like we want to grow them and mold them and shape them into mini me's and be, in fact, incredibly more impressive and successful and, better of a person than I am. So I think that's what I want to see is my sons grow up to hopefully have a little bit easier of a life than I did, but have, all the things that we have and all the things that we don't have.
Awesome. Yeah. Oh, man, family's so important. I've got young kids at home too. To bring it in a different direction, I moved from New Jersey, right near New York City, and now I'm near the coast in Florida. So I don't know, maybe I should take up surfing. What do you think, Alex?
I think you should. There's no better time to do it than now. Add one more thing to the plate, right?
Probably not now.
How about you, Alex? I'd love to hear you answer one of these questions. I'm not sure if you've ever had the tables turned on you, but any one of those appeal to you?
Any of these? Let's see. Yeah, I tend to agree with you. I think that I want to, not only with the Capstone and building it to be one of the most respected, I want it to have the most market share, because I remember the days where we had no market share, and to be able to flip the tables and be no longer the underdog and be that guy that's on top, which I think we're getting there. And especially in certain MSAs and certain markets that we're in, that is a big goal of mine. And then family, like you said, that's the most important to me. It's what we do it for. That's what I do it for. And it's why I bust my ass and work so hard. It's so that I can go home and see the life that I'm giving my wife, our kids, Avery and Emmy, and have them have I didn't have a bad life growing up. I'm not going to say that, but have them have a better life and more options and be able to do whatever they want when they grow up with no downside. Well, that's, I think, all the time we have for today. So thank you, Tim. Thank you, AJ. It's awesome having this conversation with both of you. Appreciate your insight. And hopefully we can do it again sometime soon.
Thank you for listening to Multifamily Method. If you enjoyed today's episode, please give us a rating and a review on Apple Podcasts. It helps our podcast get discovered by other savvy investors like yourself. Subscribe to Multifamily Method for free on your podcast platform of choice. Find out more about Capstone Companies at capstone-companies.com. Multifamily Method is executive produced by Capstone Companies. Audio production for the podcast provided by Andy Go of Gojo Studios, and video production by Yash Mystery of Mystery Projects.